Give us a rundown of what we've seen today because, 30 minutes ago, the Dow was down quite a bit, and now it does look to be rebounding.
Yeah, it was a roller coaster ride here on Wall Street, which was an extension of the roller coaster that we had yesterday with that slide down. Again, the S&P 500 falling 1.7% just yesterday. But today, even though it looked like at certain points of time in the day that it was going to be another ugly day, we've actually just recovered that. And the S&P 500 just for a hot second actually was in the green. The NASDAQ, that kind of tech-heavy sector, had been oscillating above and below where it closed the day yesterday, looking like a Christmas tree, green and then red and then green and then red. So there's kind of been this back and forth in trading on Wall Street. But I've been talking to investors here at the New York Stock Exchange all day, and a number of them were saying that they're not necessarily sure that the worst of the turmoil, the worst of the volatility is really past us, because that tariff conversation is still happening. And I do think that timely news just a few minutes ago, that Doug Ford having that conversation with the Secretary of Commerce, Howard Lutnick, and that resulting in a backing off from the Ontario side of things of levying that 25% surcharge on electricity to the 3 states of Michigan, Minnesota, and New York, that has coincided with some of the bounce back that we've seen in the stock market, again, as the S&P 500 does basically, float around at the level that it ended the day yesterday. That is certainly perhaps welcome news for investors that are just hoping maybe there's at least a conversation happening between these major policymakers to try to talk down and bring the temperature of these tariff talks down a little bit. But we'll have to see whether or not it results in any other action, because we have those retaliatory, or rather reciprocal tariffs that will be coming up April 2nd, not long from now.
What about the prospect for a recession, looking at what both Goldman Sachs and JP Morgan Chase are predicting toward the end of this year?
Yeah, and again, I want to point out that the numbers that we have right now on how this economy looks does not point to a recession at the moment. But yes, when we talk about the predictions for whether or not a recession could be coming down the pike, yeah, look at those stats ahead of you. JP Morgan Chase and Goldman Sachs, these Wall Street banks that watch the economy so closely, raising their odds of a recession happening. That is certainly something that's underscored by the Wall Street action. In a recession, if there's a substantial contraction in economic activity, that is bad for companies that want to return to their shareholders. There's not enough net income for them to return in the form of dividends or buybacks. I mean, without getting into the advanced finance, there's also the Main Street implications of the American consumer accounts for about 70% of economic activity in this country. So if they stop spending, that would make the U.S. economy contract as well. And we've already heard concerns from the likes of Delta Airlines, American Airlines pulling back their forecasts for how much people could be spending on travel in this current quarter. And you also have Kohl's on the retail side of things guiding lower on their outlook as well. So again, these are companies that are worried that the C-suite concerns will spill over to Main Street as well, Katie.
Vaughn, what is the White House saying about this conversation between Doug Ford and Howard Lutnick?
Nothing that I'm seeing yet. I think it's notable that Caroline Leavitt's briefing wrapped up, and then this statement came out from Premier Doug Ford of Ontario just here in the last few minutes. But I'm waiting to see from Howard Lutnick in the Commerce Department in the White House more official comments, because it's not clear the extent to which the U.S. is seeking to roll back any tariffs. Of course, President Trump, the threat this morning and the indication that he would double the tariffs on steel and aluminum from Canada from 25% to 50% was a threat, but the paperwork had not been formally signed, and that was intended to go into place tomorrow. And that's when Premier Doug Ford said that he would place 25% cost on electricity going to the United States, Michigan, Minnesota, New Yorkers who part of their energy systems are reliant on that electricity from Canada. And so clearly there is a stand down, at least specifically on increasing from the Canadian side that 25% cost onto electricity coming to the United States. But all of this is part of the idea in this apparent statement that it was released by Ford and Lutnick that the USMCA trade agreement would be renegotiated. Of course, next summer is the summer of 2026 specifically is when that reauthorization period for negotiations of the USMCA was going to be coming up anyways. Again, what is the actual objective and end game goal result of this entire trade war standoff between the United States and Canada? It's not clear, and I don't think this initial statement in the last few minutes makes it any more definitive exactly what the U.S. is looking for.
All right, with all this back and forth, Lorianne, I'm curious how this affects supply chains. Is the supply chain able to follow? There's a tariff, there's not a tariff, there's a surcharge, there's not a surcharge?
It's going to be twofold. So the immediate aspect are the shippers getting in. To kind of give you a sense, when the Chinese tariffs hit, one of the shoemakers that I interviewed, they told me they got hit with a $75,000 extra tariff that day that they were not planning for. So when you're looking at companies, Katie, that are bringing product in, they're going to be slapped immediately with the additional tariff. And you're going to be talking about a very big price tag here. Now, when you look at the why, I've got a really great chart that I want to show you in terms of the why. Trump does have a reason for deploying these tariffs on China. In 2001, Biden rescinded the 232 tariff on steel and aluminum. Look at that chart. Once Biden was elected and he took off those tariffs, look at the amount of aluminum that has come in from both Canada as well as Australia. Canada, of course, as you can see, is the larger of the two. Now, this actually impacted U.S. jobs. We had smelters that actually closed over the last year because of these of the dumping, if you will, of the aluminum tariffs. So that's the reason why you have a lot of U.S. Aluminum and steel makers rejoicing in this. But it's that fine line, because then you've got the shippers that, you know, they may be making hammers or other tools, if you will, with those products. They're going to get slapped with their tariff, and then they're going to have to go back to the retailer to say, hey, listen, can we share some of this pain? And based on my discussions with a lot of companies, those retailers are telling them no. So they have to eat it.
So there's always a knock-on effect, but it is an important point to make about how there are some U.S. industries who believe the tariffs are a good thing. And I'm so happy you brought that graphic showing just how much more aluminum and steel we imported after Joe Biden became president 5 years ago. Ashley Parker, that gets us to the long view of this. And I've been wondering this for a few days. I believe you're wondering it as well. Usually Donald Trump reacts pretty swiftly to headlines, to the markets especially. But he's not doing so now. And just to remind everybody, let me play what Donald Trump has said about the markets. And you can see how it's changed from when he was president to the first time to today. Excuse me. Listen.
Every day for the last long period of days, the stock market, meaning companies, have been hitting new highs. The stock market reached yet another all-time, in history, all-time high today, boosting the retirement savings, hopefully, of everybody in this room.
You know, the markets have gone through the roof since November 9th. That's the day after I won the election.
The economy has just been reported to be doing very badly. The stock market's way down.
We have a very, very sick country right now. You saw the other day with the stock market crashing. That was just the beginning.
Nothing to do with the market. I'm not even looking at the market. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
So that's interesting right there. That's a different Donald Trump. Don't look at the short term, look at the long term. Is that what's going on here? Is he really trying to rebalance things? And is he willing to take the pain that's going to cause in the short term?
Well, this has been absolutely fascinating to watch. And if you'll indulge me for a second, you and I and Vaughn, actually, we all first met back in 2015 when no one thought that Donald Trump was going to win the presidency. And when he did, I was finishing up at the New York Times. I was just getting ready to leave to go to the Washington Post. And I had to field all of these frantic questions from reporters and editors there who had never expected him to become president, trying to understand who is this man and how does he behave? Is he playing three-dimensional chess? And having reported on him and observed him, and this was true then and it's been true up till right about now, the answer I gave, which is long held true, is Donald Trump is a businessman who is trying to win the minute, the hour, the day, the week. He is trying to win over the person directly in front of him. He is not playing 3D chess. So watching, and he's also someone who, from those earlier clips you showed, he treats the stock market numbers the way he treats polls. When it's up, that is good for him. If he's in power, it is bad if they are down for whoever is in power, him. And so to see him now taking this perspective, which we've seen for a couple of days now, of likening it to China, saying, I'm in it for the long game. potentially a centuries-long appeal. This is something we've seen from other presidents, like President Obama trying to push through the Affordable Care Act, but never really from Trump in a sustained way. And so I am so curious to see how long he can stomach that short-term pain for what he claims will be long-term gain, especially when the stock market he views as a reflection on himself, the way polls are.
He said that he believes that multinational corporations are bad. Globalists are bad. They're stealing from us. Is that the view of the people that he's put around him as well? I mean, could this be the goal of the administration, of the economic folks that are inside this administration, to truly to bring back manufacturing home, to rehome multinational corporations, to make this a place that is less dependent on global forces?
Well, put it this way, you certainly have a more homogenous group of advisors around him this time than you did the first time he was president, right? Where you had Gary Cohn stealing pieces of paper off his desk to try to prevent, what he viewed as cataclysmic trade decisions. You have Peter Navarro in there, who definitely shares this view. But again, what's interesting is while there are more people who have that view, this idea that the United States is getting a bad deal, that we're getting taken advantage of, and that one of the ways you stop it is through trade and through tariffs. In terms of the comments and the recognition of the current reality, it's actually Trump who is far more willing to acknowledge there might be, as he would put it, a little bit of a disturbance. This might be a little bit of a transition period. And not everyone in his administration is saying the same thing. And that's yet another thing that's causing these markets to fluctuate wildly, because the markets like certainty. And when Trump says one thing and his commerce secretary says another thing, that's confusion.